Welcome to the 6th installment of Trading Strategy Guide's Trading Education Series. Today, we're going to talk a bit about the currency market. Stick around. Hi, this is Tim from TradingStrategyGuides.com. Thanks for coming back for this installment of our Trading Education Series. Today's video will be short. I'm going to explain some fairly basic stuff. We'll be getting a lot deeper into these topics, but I want to be sure everyone is on the same page and understands all the terminology before we get into the more extensive explanations. When someone asks me what I do for a living, my answer is usually that I'm a currency trader. That answer is often followed by a blank expression on the questioner's face. Being a teacher kind of guy, I then launch into an explanation of what currencies are and what I actually do, and well, I go well beyond the attention span of the person that asked the innocent question. Yes, I like to be thorough in my explanations, and my wife usually tells me that I explain way too much. But I digress. My conclusion from this scenario is that many people don't understand what currency is. So that's where I'm going to start. Currency, or more specifically fiat currency, is money that's typically backed by a sovereign government. It's called fiat currency because it's created by government fiat, or regulation, and has no intrinsic value. And when I say no intrinsic value, that just means that it has no value outside of the value given it by the government that backs it up. But it has no value in itself. Contrast that with, for example, gold, which has value in itself. Fiat currencies are the money most of us use on a daily basis. US dollars, euros, Great British pounds, sterlings, etc. The currency market is the market that trades these fiat currencies throughout the world. Back in the 80s and before, currencies were traded between banks via a market called the interbank. This was typically done at first via telephone call, then eventually via computer network. The interbank was only available to banks and unavailable to us small retail traders. Then in the late 90s, some of the banks, in an effort to create more business, I suppose, decided to let us little guys in on the currency trading market and began to create forex dealers that would operate between the banks and the small traders. That allowed the small traders to trade currencies with the banks through the retail dealers. This trend continued to grow, and now there are hundreds of forex dealers doing billions of dollars of currency transactions every day. You can trade just about any fiat currency in the world directly from your home computer. Anything from the 8 currencies we call the majors: the US dollar, the euro, the British pound sterling, Swiss franc, Japanese yen, Canadian dollar, Australian dollar, and the New Zealand dollar. Then to less liquid currencies like the Mexican peso, the Russian ruble, the South African rand, the Danish krone, and hundreds more. Since there is no centralized exchange like the New York or London stock exchanges for stocks, or the Chicago Mercantile Exchange for commodities and other markets, forex dealers are independent and often quote slightly different pricing. You'll notice the differences if you look at charts from different price feeds side by side on your screen. And that's an explanation of what the currency market is. And that wraps it up for this video. Don't miss our next installment in the Trading Education Series next Wednesday, where we'll discuss what is a currency pair. And of course, be sure to catch my Trading Picks videos on Friday and Monday of every week. Also, be sure to subscribe and hit the bell so you'll be notified when these videos come out. Have a great Wednesday, and I'll see you on Friday.